Good afternoon, everyone.
Good afternoon, sir.
So we had started with the chapter of amalgamation. We had learned what is amalgamation, absorption, external reconstruction. Then we had learned about amalgamation in the nature of merger and amalgamation in the nature of purchase, the difference between the two. Then we had started with the journal entries in the books of. Before that, we learned transferor, transferee, that is your vendor company and purchasing company, and then we started with the journal entries in the books of a vendor company. We have done quite a few entries. A few entries are still pending. I'll explain you those entries and then we will go ahead with the calculation or to know what is purchase consideration, how to calculate purchase consideration, etc. Give me a moment, I'll share my screen with you and then we will go ahead. I hope you all are now able to see my screen.
Yes, sir.
Okay. We have done up to sale of asset and payment of liabilities. Next, number 11. Dissolution expenses. In that we will have expenses paid and borne by vendor company, expenses paid by vendor company but reimbursed by purchasing company, and paid and borne by the purchasing company. Three variants. So number 11, write down dissolution expenses. In that, A, paid and borne by vendor company. Now please remember that we are writing down in the books of vendor company, and the expenses of dissolution is paid as well as borne by the vendor company. That is, purchasing company is nowhere into the picture. So can I say that when the expenses are paid and borne by the vendor company, the entry should be realization account debit. Reason being, all the expenses at the time of dissolution is charged or debited to realization account, and bank account would be credited. Reason being, cash is going out. Realization account debit to bank account. B, you will have paid by vendor company but reimbursed by purchasing company. So in this transaction, what is happening is purchasing company is saying that अभी तुम पे कर दो, बाद में मेरे से ले लेना. That is nothing but it asks, the purchasing company is asking vendor company to pay it first and get it reimbursed from purchasing company. So there are two transactions over here. One, payment by the vendor company, and second, receiving the money from the purchasing company. So first, we will pass an entry for payment. Vendor company is paying on behalf of purchasing company. It is not an expense of vendor company. Here, vendor company is paying on behalf of purchasing company. So the first entry for payment by vendor company will be purchasing company account debit to bank, and then for reimbursement by purchasing company, it is receiving of money from purchasing company. Entry bank account debit to purchasing company. I hope this is understood. Please copy this down. Did you all copy the first entry? Did you all copy this entry?
Yes, sir.
If not, copy. Okay, done. Good. Copy these two entries, then we will go ahead. Let's go ahead. Third, it is paid and borne by the purchasing company. It is paid and borne by purchasing company. Can you tell me what will be the entry in the books of vendor company when we are closing down books of account, that is at the
No
time of
entry, sir.
dissolution? It is paid and borne by the purchasing company. Why there won't be any entry over here?
The vendor company is not involved in the transaction.
Correct. There is no financial transaction for vendor company. So here you will not have any entry. Shall we move ahead? Number 12, settle preference shareholders liability. That means we need to close down preference shareholders, pay off preference shareholders, close down preference shareholders account, and transfer the balance, if any, to the realization account. So in the step number 12, we will settle preference shareholders liability. That is, we will pay off whatever is to be paid to preference shareholders. Either it may be cash, it may be preference shares, it may be equity shares, anything. So while settling the liability of preference shareholders, the entry will be preference shareholders account debit to bank if cash is paid, to preference shares of purchasing company, to equity shares of purchasing company. Whatever it is paid, here I am writing down everything, but whatever is paid will come over here. So while settling the preference shareholders liability, entry will be preference shareholders account debit to bank, to preference shares of purchasing company, to equity shares of purchasing company. Whatever is paid is credited over here. After settling preference shareholders liability, we will close down preference shareholders account and transfer the balance, if any. If there is any balance, that balance will be transferred to the account. I'm writing down. Once preference shareholders are paid, close down preference shareholders account and transfer the balance, if any, to realization account. Copy this down. This is done. Shall we go ahead?
Wait, sir.
Yeah.
Done, sir.
Okay. Number 13. Close realization account, transfer profit or loss to equity shareholders account. Now, while we are closing, at last we need to close realization account. Whatever is the balance, that will be transferred to equity shareholders account. In case of profit, the entry will be realization account debit to equity shareholders account, and if it is a loss, the entry will be reversed, that is equity shareholders account debit to realization account. Copy this part. Done.
Done, sir.
Okay. Last, number 14, it will be settle equity shareholders claim. That means we will pay off equity shareholders. Equity shareholders will be paid cash or maybe equity shares or maybe preference shares, whatever it is. What we have received from purchasing company, that will be given to equity shareholders. Once equity shareholders are paid, all your accounts which you have opened should tally. Once equity shareholders are paid, all your accounts should tally. The reason behind it is equity shareholders are the last person to be paid off. So once equity shareholders are paid off, nothing should be balanced in any of the accounts. The entry when equity shareholders will be paid will be equity shareholders account debit to bank to equity shares of purchasing company to preference shares of purchasing company. Equity shareholders account debit to bank if cash is paid to equity shares of purchasing company to preference shares of purchasing company. Whatever is paid to equity shareholders, that will come in the debit. Sorry, in the credit side. Equity shareholders will come on the debit side. Whatever is paid will come on the credit side. Equity shareholders will be on the debit side. Post equity shareholders are paid. Once equity shareholders are paid off, all accounts should tally. Is this copy?
Yes, sir.
Okay. Now we need to start with the. Okay. Before we go ahead, any doubts in any of the entries? Anything? Any doubts? Any queries? Let's start with purchase consideration. Now, before I go ahead with the purchase consideration, I request you all to speak up. What do you mean by purchase consideration based on what you have learned in the second year? In second year, you had amalgamation of firms. So over there, we have learned purchase consideration. So before I go ahead, please let me know what is there with you in the name of purchase consideration. What do you mean by purchase consideration? What does purchase consideration mean to you?
It is the amount paid by purchasing company to vendor company.
Okay. Amount paid by purchasing company to vendor company. Okay. Anything else? Perfect. So purchase consideration is nothing but for transfer of business by the vendor company to the purchasing company, the amount paid is known as purchase consideration. For the transfer of business from vendor company to purchasing company, the amount paid for transfer is known as purchase consideration. We need to keep in mind that, please listen to this carefully, many a times this is the mistake. We need to keep in mind that the liability scope purchased by the purchasing company is then paid off, then that amount should not be included in the calculation of purchase consideration. That means if there is 5 lakh rupees creditors which is transferred from the vendor company to the purchasing company, and after purchasing company taking over the business, they pay off the creditors, then the entry for pay off the creditors should not be given any effect while calculating purchase consideration. The reason, there are two different transactions. One, the first transaction of transferring the liability from vendor company to purchasing company, and second transaction paying off the liability. So transferring the liability from vendor company to purchase company should be recorded for the purpose of purchase consideration, but the transaction of purchasing company paying off the liability should not be given any effect for the calculation of purchase consideration. ये समझा सबको? Any doubts over here? Let's go ahead.
Can you repeat one more time?
Vendor company in its books of accounts has a debentures of rupees 1 lakh. As a part of amalgamation, vendor company is transferring its business including debenture holders of rupees 1 lakh to purchasing company. The purchasing company, after receiving debenture holders, are paying off to debenture holders in full. So in this whole scenario, there are two transactions. The first transaction being transferring the liability from vendor company to purchasing company, and second transaction paying off the liability. While calculating purchase consideration, we should keep in mind that the effect for transferring the liability from vendor company to purchase company should be considered, but payment of liability by the purchasing company after acquiring business should not be taken into consideration for calculation of purchase consideration. Transfer of liability from vendor company to purchasing company is a financial transaction for vendor company. Hence, we take into consideration while calculating purchase consideration. But payment of liability by the purchasing company is not a financial transaction for vendor company, so it will not reflect in purchase consideration. समझा सबको? Any doubt? Okay, let's go ahead. So there are various methods of calculating purchase consideration. The first method is lump sum method. In lump sum method, it is simple. The question will say that the purchasing company is going to pay 10 lakh rupees to the vendor company. There is nowhere any mention about uh, assets taken over, at value those are taken over. Nothing is mentioned over there. It is simple. 10 lakh rupees paid by purchasing company to vendor company. That is lump sum method. Number two is net asset method. Now, under this net asset method, we calculate purchase consideration. And how do we calculate purchase consideration? It is simple. Total assets taken over at taken over value less total liabilities taken over at taken over value. Now this thing is important over here. Assets which are taken over will only come over here. Liabilities which are taken over will only come over here. And you will take the assets and liabilities at what value? At taken over value. So purchase consideration as per net asset method is nothing but total of all the assets which are taken over at taken over value less total liabilities taken over at taken over value. So all the assets which are taken over either at agreed value or taken over value. Agreed value is a different word. So assets which are taken over at taken over value or agreed value less liabilities taken over at taken over value is nothing but purchase consideration as per net asset method. Number three you have is net payments method. Under net payments method, what you do is you will get to know that how many shares are given to whom, in what ratio they are given. Like say for example, for every 3 share held, 2 share will be given. Other words, for every 3 equity shares held in vendor company, 2 shares of purchasing company will be given. So what payment is done to whom? Specifically, that is known to us. When we have this information, then we calculate a net payments purchase consideration as per net payments method. So how many shares are given to equity shareholders? How many shares are given to preference shareholders? Exact payment to equity shareholders, exact payment to preference shareholders will be given to you. Then purchase consideration will be calculated as per net payments method. Now I would like to ask you one question, that any payment done to debenture holders, will it come in net payments method? Any payment done to debenture holders, will that come in net payments method for the purpose of calculation of purchase consideration?
No.
What is the reason behind it, Sushant? There has to be some reason, right?
Yes, sir.
The reason behind it is that purchase consideration is calculated for only the amount which is payable to the owners of the company, not to the outsiders. Purchase consideration is the amount payable by the purchasing company to the vendor company to the owners of the business. So anything payable to preference shareholders, anything payable to equity shareholders will feature in net payments method for the purpose of calculation of purchase consideration. But if it is paid to debenture holders, then that will not come in purchase consideration calculation. So anything paid to owners of the business, there are only two owners of the business, equity shareholders and preference shareholders. So anything paid to them will come in calculation of purchase consideration. Now, one question to you. In exchange of 5 equity shares in vendor company, in exchange of 5 equity shares in vendor company, 3 equity shares of purchasing company and 1 debenture is given to equity shareholders. In exchange of 5 equity shares in vendor company, equity shareholders are given 3 equity shares in purchasing company and 1 debenture of purchasing company. Will you take this debenture which is given to equity shareholders for the purpose of calculation of purchase consideration? Any amount paid to equity shareholders in form of debentures, will that come in calculation of purchase consideration? Yes or no?
Sir, can you repeat it once again?
For every 5 equity shares in vendor company, purchasing company issues 3 equity shares and 1 debenture. So my question is that 1 debenture which is paid to equity shareholders, will it come in our calculation of net payments method as per for purchase consideration?
Yes. It is payable to the owners of the company.
Correct. So what is important is to whom it is paid. What is paid is not important. To whom it is paid is important. So if it is paid to equity shareholders, if it is paid to preference shareholders, then it will feature in calculation of purchase consideration. What is paid is not important. Whatever may be paid, you add it up. But to whom it is paid is important. So if it is payable to equity shareholders or if it is payable to preference shareholders, then those things will come in the list of purchase consideration as per net payments method. समझा सबको? Yes.
Yes, sir, got it.
Shall we go ahead with the journal entries in the books of purchasing company? I had also told you all
Yes.
that when we are writing down in the book of vendor company, whether the amalgamation is in the nature of purchase or whether the amalgamation is in the nature of merger, that is not important. The set of entries will remain the same. But when we are writing down in the books of purchasing company, then the set of entries will change. depending on depending on whether the amalgamation is in the nature of merger or whether the amalgamation is in the nature of purchase. Give me a moment. Now going down to the books of purchasing company. First we will learn in the nature of purchase, and then we will see how to do in the nature of merger. In the nature of purchase, what are entries we need to pass? That is important. Now, whenever we say that amalgamation is in the nature of purchase, that means that one company is purchasing another company, wherein both the existing company closes down and the new company is opened up. When both the companies are closed down and businesses are transferred from the vendor company to purchasing company, in the books of purchasing company, the first entry what we pass is for acquisition of business of vendor company. So the first entry what we pass is for acquisition of business of a vendor company. The entry is business purchase account debit to liquidators of vendor company. Now, when we are purchasing the business from the vendors of liquidators of vendor company, liquidators of vendor company means those people who are helping the vendor company to close down its business. First, we pass a consolidated entry saying that we have purchased a business and we have to pay to the liquidators of vendor company. Now, what to pay, what we are going to receive, those things will come later on. So first, in general, an entry is passed, that is, a business purchase is done. So business purchase account debit to liquidators of vendor company, and this entry is passed at the amount of purchase consideration. This entry is passed at the amount of purchase consideration. Please copy this down, then we will go ahead. Is it done? Shall we go ahead?
Done, sir.
Okay. Give me a moment. After the acquisition of business, next we will pass an entry for incorporating assets and liabilities which are taken over from the vendor company. Incorporation of assets and liabilities taken over from vendor company. So here, this is the place where we will record all the assets which are taken over, all the liabilities which are taken over from the liquidators of the vendor company. So we will debit all the assets which are taken over. I repeat, we will debit all the assets which are taken over at taken over value. Okay. So here what I am writing down is I am writing various assets account debit at taken over value we will credit all the liabilities which are taken over and that will be again at taken over value to various liabilities at taken over value to business purchase account at purchase consideration amount. Now we had debited business purchase in the first entry. Now here in the second entry we are crediting business purchase. So the business purchase account gets nullified over here. We debit all the assets which are taken over at taken over value. Here I have written down various assets, but in the answer we write down building, plant and machinery, furniture, computer, stock, debtors, whatever is there. All those assets will be written down one by one, and the entry will be done at taken over value. Liabilities will be credited. So to various liabilities, debenture holders, or maybe creditors, bank loan, bills payable, etc. Whatever it is. All those liabilities which are taken over to various liabilities taken over at taken over value to business purchase account at purchase consideration. Whenever your purchase consideration is, I repeat, whenever your purchase consideration is calculated as per net asset method, there is a chance, okay, there is a chance that you pay little higher or you pay little less. That is, the purchasing company is paying little higher or purchasing company is paying little less. Then in that case, the entries will match. Class, what did I say? I think I made some mistake. I'll repeat. Whenever you calculate your purchase consideration by net asset method, whenever you calculate your purchase consideration by net asset method, you pay the exact amount for the assets and liabilities taken over. Because if you see in net asset method, for calculating purchase consideration, we total up all the assets which are taken over at taken over value, and from that we reduce the liabilities which are taken over at taken over value. And in this entry as well, we are writing down the same assets taken over at taken over value, liabilities taken over at taken over value, and business purchase is credited by the purchase consideration amount. So you will never have any difference. What did I say? When purchase consideration is calculated under the method of net asset, there won't be any difference and this entry should tally. But if your purchase consideration is calculated by net payments method, then there is a chance, I repeat, when the purchase consideration is calculated by net payments method or maybe by lump sum method, then there is a chance that there is a difference. If the difference comes in the debit side, then you will debit goodwill account. If there is a difference on the credit side, then you will credit capital reserve account. The entry will be passed for difference. You will have either goodwill or capital reserve. You cannot have both. In the entry, either you will have difference on the debit side or you will have a difference on the credit side. If it is on the debit side, that means you are paying more. That's a loss for you and goodwill account should be debited. If you are paying less, that's a profit for you. The profit is capital in nature, so it goes to capital reserve account. I'll write down a note. When PC is calculated under net asset method, difference arises when PC is calculated under net payments method or lump sum, there is a chance of difference on debit side is goodwill and difference on credit side is capital reserve. Kindly copy this down first. First copy the entry, then I'll scroll. This topic, shall we go ahead? Weekly profit, shall we go ahead? Let's go ahead. Next, after this, we have discharge of purchase consideration. Number 3, discharge of purchase consideration. That is nothing but the purchasing company is going to pay off to the liquidators of the vendor company whatever is agreed upon for purchase consideration. So if the equity shares are to be issued, preference shares are to be issued, or maybe cash is to be paid, those things will come over here in this entry. So liquidators of the vendor company are paid. So on the debit side you have liquidators of vendor company account debit. The equity shares are given by the purchasing company to the vendor company. Equity shares of the purchasing company are given by purchasing company to vendor company. So can I say that for the purchasing company it is as good as issuing equity shares. When shares are issued, equity share capital is credited. If the shares are issued at premium, the premium amount goes to securities premium account, and if the shares are issued at discount, the discount amount goes to discount on issue of shares account. So first we'll write down to equity share capital account to preference share capital account to cash or bank to security premium, and if the shares are issued at discount, discount on issue of shares account debit. Copy this entry first. Is this copied? Shall we go ahead?
Yes.
After passing the first 3 entries, if you check, your dummy accounts such as your business purchase and liquidators of vendor company are closed. In the first entry, we pass business purchase to liquidators. In the second entry, assets to liabilities to business purchase. And in the third entry, liquidators to equity share capital, preference share capital to cash bank. So if you see your dummy account of business purchase and liquidators of vendor company are closed, and all the assets and liabilities which were taken over are incorporated in the books of accounts, and the payment to be done to the vendor company is also done after passing the 3 entries. Now, number 4, you have creation of statutory reserve. Number 4, creation of statutory reserve. Say for example, you are running a business where the government requires you to create a reserve. So the reserve which you create for that is known as statutory reserve. It is compulsory for you to create that reserve. Okay. So currently you are not into that business, and now by taking over the business from vendor company, you need to now create the statutory reserve. So when you create the statutory reserve, you pass an entry as amalgamation adjustment reserve account debit to statutory reserve account. Amalgamation adjustment reserve account debit to statutory reserve account. Your amalgamation adjustment reserve and statutory reserve both will form part of your reserves and surplus, and your amalgamation adjustment reserve will be shown as a negative figure in reserves and surplus. So in reserves and surplus you show positive 10,000 and you show negative 10,000. It does not affect the balance sheet, but yes, it does serve the purpose of creation of statutory reserve, which is compulsory in nature for you to run the business. Next, number 5. Discharge of debentures of vendor company. Now everybody please listen to this carefully. The vendor company had issued debentures. Now there is amalgamation wherein the vendor company is closing down. Can you have a debenture of a company which is already closed down? The company is not into existence, but can you have debentures? No, you cannot have that. So in that case, what you will do over here in case of amalgamation, that the debentures of the old company or vendor company are exchanged for debentures of purchasing company. The debentures are exchanged. Debentures of vendor company are exchanged for debentures of purchasing company. Yes, there may be some settlement done saying that for ₹1,000 you will get only for ₹900. So there may be some profit or there may be some loss in that. So for discharge of debentures of vendor company, entry is debentures of vendor company account debit to debentures in purchasing company to securities premium to cash bank. If debentures of vendor company are paid in cash, then what do? Debentures of vendor company to cash bank. So the liability of the vendor company which cannot exist after the amalgamation, that is dissolution of vendor company, then that liability is exchanged in the name of new liability or it is paid off in form of cash. Copy this down fast. Next, for share issue expense, dissolution expense, number 6, share issue expense. As the shares are issued by the purchasing company, there will be some expense. So for share issue expense, the entry will be share issue expense account debit to bank. Simple. Share issue expense account debit to bank. If the dissolution expense of vendor company is paid by the purchasing company, okay, so the purchasing company is owning the expense, okay. If dissolution expense borne and paid by purchasing company, then in that case the entry will be goodwill account debit to bank account. It is the expense of vendor company, but the purchasing company is paying out of its pocket. So in that case, it is the excess amount which is paid by the purchasing company to vendor company. When some excess is paid, goodwill account is debited. Goodwill account debit to bank account. For dissolution expenses borne and paid by the purchasing company. Dissolution expense of the vendor company is borne and paid by the purchasing company. Lastly, number 8, it will be set off goodwill and capital reserve. That means, say for example, in the second entry, when goodwill or capital reserve is created, you can either have goodwill or capital reserve. But over there, say for example, capital reserve was created and the dissolution expenses are borne and paid by the purchasing company. Goodwill represents the loss for the purchasing company on the transaction of amalgamation, the excess amount being paid to the vendor company, and capital reserve represents profit on amalgamation. So you cannot show in your books of accounts both profit as well as loss on a particular transaction. You will have to show either net profit or net loss. In that case, when the goodwill has to be set off against capital reserve, the entry will be capital reserve account debit to goodwill account. Capital reserve account debit to goodwill account. Copy this down. Any doubts, any queries, any questions? Class, this is it from my side for the day. We'll learn about the entries in the books of purchasing company when the amalgamation is in the nature of merger next time. Thank you so much. I have recorded the attendance. Those who wish to leave can leave. Those who have any doubts, queries, questions can unmute and ask me.
Thank you, sir.
Thank you so much, everyone.
Thank you, sir.
Thank you so much, everyone.